Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is June 6, 2024. This is the Kickstart video where I take a look at three of the major currency pairs, the euro versus US dollar, dollar versus yen, sterling versus US dollar. We've had a data dump, including an ECB rate cut, and that cut was accompanied by non-commitment from the ECB. We have ECB's Lagarde starting her speech shortly, and the market's going to be paying attention to what she has to say about the any sort of policy implications going forward. The market is pricing in an October rate cut currently at the moment. The other news that we had today was trade balances. We also had U.S. initial jobless claims, which came in a little bit higher than expected at 229,000, but the continuing claims were steady at relatively lower levels. To be honest with you, we have the unit labor productivity data come out a little bit better than expectations, with the unit labor costs coming down a little bit. We're seeing U.S. Stocks move near unchanged levels, trading above and below unchanged currently at the moment in the major indices after the S&P and NASDAQ index closed at record levels yesterday. And we are seeing U.S. yields move marginally higher after, I think, 5 days of declines that have taken the yields down 30, 35 basis points over the last 6 or so trading days. So big moves to the downside, a little move to the upside trading here today. So with all that preview, let's get into the technicals that are driving these currency pairs. It's kind of choppy. So we will see what they are saying right now. So let's get started. All right, looking at the 4-hour chart of the euro versus US dollar. This is the current bar, and it pretty much, well, it sets a trading range, to be honest with you. This is the low price on the 4-hour chart for the day. This is high price for the day. So we're seeing up and down volatility in the current 4-hour bar. Technically, the price remains above its 100 bar moving average on the 4-hour chart. That level comes in at 1.0854-ish type level. If we in trading yesterday, the price came down toward that level and found support buyers and bounced off of that level. We'll end in trading today. We didn't quite get close to it. We are seeing the market within this swing area through here between 1.0875 and 1.0887. The May high came in at 1.0894, so you kind of use that level as well. And notice in trading here today, the high price prior to the last move to the upside after the rate decision sent the price right up to that level, that May high, and found willing sellers against that level. Admittedly, in June, the price did move above that level, moving up to 1.0915 before rotating back to the downside right through here. So what does all this gobbledygook say? Well, watch 1.08758 level. It's getting a little bit messy, obviously, this week with the ups and downs as the market prepares for the rate decision and all the other data this week. But if price were to go back below the 0.8758 level, it could be disappointment on the move to the upside after the rate decision, in which case I would then start to look toward the 100 bar moving average on the 4-hour chart. Alternatively, if we get back above the 1.0894 another time today, it may be time to explore moving up to the 1.0915. Right now, we are seeing up and down volatility though. You can see that more clearly on the hourly chart. Go to the hourly chart, and what sticks out to me is the 200-hour moving average. That level held support at the low price yesterday. The low price today didn't approach it. We came, with some space between the low price and that 200-hour moving average. So if we do go lower, we would look for a break below the 1.0856 to give traders more confidence that the downside is the way to go. This is that May high at 1.0894. The price quickly spiked above that level, but then rotated back to the downside and back into this swing area through here. So we're watching the 1.08758 might also include the 100-hour moving average on the downside for this currency pair. All right, that's enough on that currency pair. Lots of ups and downs and volatility. Let's take a look at the dollar versus yen here. This is the hourly chart of this pair, and in trading on Tuesday, the price fell sharply to the downside. We fell into this swing area down through here between 154.59 and 154.878. The low price came in just below that at 154.53 before starting its rotation back to the upside. And trading yesterday, what did we do? We retraced the entire move down almost to the the decimal of the pip level. And so sharp move to the downside, sharp move to the upside, and found willing sellers up here near the 156.49 level. And that is going to be a key level today and going forward. Not only was it is it the 61.8% retracement, but you can also go back to these levels right through here where the price found initially support buyers through here, and then we use that level as resistance, right, if I can get on the arrow, right here and here. So that level is going to be key. Also near that level is the 200-hour moving average, just say 8 or so pips higher. So 156.49 up to 156.58 is a key resistance on the top side for the dollar versus yen. If we do move above that level, it opens the door for further upside momentum in this currency pair. Alternatively, if the price if the price were to move lower, I would probably watch maybe this level right through here at the 155.95 level. That level goes back to over here where we had support, and there's some other levels, so you can sort of blur your eyes and see where it's a resistance right here, and then resistance right here, and then support right through here, and found some support and resistance around this area right through here. So this level is going to be a key. If we get below that level and stay below that level, it probably increases the bearish bias for the dollar versus yen, at least in the short term for that pair. So let's take a look at the sterling versus US dollar to end this thing. And here we are starting at the 4-hour chart. And I had here marked this 127.93 to 128.02 level. Need to get above the 128 level and stay above that level to increase the bullish bias in the sterling. That's going to remain the key going forward. Admittedly, we did move above it in trading 2 different times this week. Once earlier the week and once more recently toward the end of yesterday and early today. But the momentum above the 128 level has failed, and we currently trade lower. We're currently trading at 127.78, so about 23 basis points away from the 128 level and getting above the 02 level on the top side. So be aware of that. The sellers, the buyers had their shot twice this week and they missed on both those times. We are seeing continued, though, up and down price action in the sterling versus US dollar. Taking a look at the hourly chart. What is key here is the 100 and 200-hour moving averages. If we the past few days have seen support buyers come in against the 100-bar moving average. On this day right here, support buyers came in against the 100 and 200-hour moving averages. So if the price were to break below the 100-hour moving average and then below the 200-hour moving average, that is needed to increase the bearish bias. Those levels come in at 1.2769 and 1.2755. Get below both those levels, and we'll look toward the 100-bar moving average in the 4-hour chart at 1.27258. So there you have it, a Kickstart video of the 3 major currency pairs, along with an update of the fundamentals that have been driving the market and trading here today. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.